Hey guys, and welcome back to the Ginger Realtor Show. It's our first Mortgage Mondays of the year. We have Mike with us. Mike is from the mortgage firm. Mike, thanks for joining us.
Hey, Happy New Year.
Happy New Year to you too. All right, so let's kick into it. New year, we're seeing rates changing. We're seeing it probably becoming a more open playing field for home buyers this year. So let's kick off with kind of what you need to do to get ready to buy a home.
Yeah, I mean, the biggest thing right now, the Fed announced they're going to have several rate drops this year in 2024. So things are going to continue to go in our favor. Obviously, as rates go down, values may go up, so it's never a sit back and wait type of thing. But to get ready, best thing to do is get with me, get with your preferred lender, definitely get with Gavin, and make sure your credit is on point. Every 20 points on your credit score matters drastically in your pricing. So whether you're doing a conventional loan or a government loan, you definitely want to make sure your credit is maximized to the highest it can possibly be, depending for your situation. I'm looking at rates right now. I got them pulled up right here. A standard, $400,000 home, putting 25% down. Good credit, single family home. You're easily in the mid sixes.
Which is great. Bear in mind that it wasn't that long ago we were up nearly at 8.
We were mid eights for a couple weeks there. It was
Now,
getting real ugly.
I know having to do mortgage and realtor math off the top of your head is painful, but for that $400,000 purchase, the difference between a monthly payment at 8.5 and 6.5 is roughly what a month.
Well, I will tell you. So a $300,000 loan, my rate sheet stops at 7.99, so call it 8%.
Okay.
Your principal and interest payment is $21.99, no taxes or anything, just $21.99. 6.5, it's $18.96.
So you're talking nearly $300 a month
Yep.
difference. So that's a huge difference. That's nearly $3,000 a year. That's clearly a whole mortgage payment that you're not losing to high interest.
Yeah, absolutely. It's I mean, you can go, some people want to pay, a couple points if you think you're going to stay in this house for a long time and it's a good investment for you to buy points. You could pay 2 points and be 5.99. I mean,
So getting under 6% would be fantastic. And again, when you're looking at points, and we spoke about this last year, is work out how long you're going to be in a property, how long what your anticipation is before just jumping down the garden path of buying points, because it's not right for everybody. Because if you decide to move after 3 years and your difference is such that you might not make that money back. So definitely
right.
speak with your mortgage professionals and work out whether buying points is right for you, or whether, just a couple of years of paying a slightly higher fee, or maybe just being able to refinance after a year because rates have come down enough.
Yeah, FHA. I'm looking at FHA now. I mean, FHA, it's really easy to get down into the fives. Low sixes are simple. It's really this year is going to be a phenomenal year. I know you and I were just talking off camera.
I think you're going to see a lot of people who were holding off last year, both in buying a house and selling their current homes. I think they're going to become a little bit more easy to convince to make that move. And although I do see prices increasing, still 3 to 8% is the number that I was reading. I still think that's going to be a significant catalyst to be able to push things forward.
Absolutely, I agree. And no, I'm excited for this year. We were just saying off camera, we gotta wake up after the new year. We've been out of the office, and we've all been all the events that we've been to over the course of the last couple of weeks or month.
Yeah, I need to get these cheeks
feels like forever.
down a bit.
It's time to snap out of it and get going, because the phone's going to start ringing. It already has.
So last year, towards the end, we were speaking a lot about the Hometown Heroes program. I know that there's nothing left in the pot from last year, and there's no new pot that's been announced just yet. So if you're in a position where maybe you need kind of some sort of home buyer assistance program, what's out there right now for home buyers?
Well, Hometown Heroes being gone, so every other Monday, 2 days ago, they check the pot is basically what to do, because when you have people that reserve the funds, those deals may fall apart. Like you've been in real estate a long time, stuff falls apart.
Yeah,
Monday morning at 10:30, there was $3.2 million available. It was gone by 1 o'clock.
okay, so it's
Yeah,
not,
it just, we're like a bunch of vultures. Like I have my assistant group kind of, 10:30 when it opens up, they look and say, they call me like, Mike, there's $3.2 million left. Who do we have? And try to find them. So anyway, that's gone. But then in two more weeks or a week and a half, maybe there'll be a little bit more left. So Florida Bond is kind of like, it's just like Hometown Heroes. I mean, it's very similar, same guidelines for the most part. The biggest difference is Hometown Heroes gives 5% of the loan amount,
mhm,
Florida Bond just gives 10,000.
okay,
So I just had somebody that was Hometown Heroes, $240,000 loan. They were getting 5%, which was 13,000 bucks. That deal dragged out for some permitting issues, and we couldn't get any more home inspect or couldn't get any more extensions from Hometown Heroes, so we had to kill it. So we killed it and flipped it over to Florida Bond,
then now she's
which,
gotta find another $2,000-3,000.
yeah, but the good thing is we had so many extensions over the last 4 months with these permitting issues that she hasn't been paying rent, so she had the money. So it all worked out, and the rates have gone down since we locked her in with Hometown Heroes. So she ended up getting 0.5% better in rate. So
Well, that's not too bad at all then.
yeah, so it worked out.
So look, I know Hometown Heroes is something that you love. It's one of those things that you push to us in the office. Do you see that coming back in 2024?
I do. I mean, I just feel like it's needed. I feel like one good thing about Florida is they do everything to keep the economy going. There's always positive stuff when it comes to, Florida. So I think they need it. I haven't heard anything one way or the other, but I just think it's needed. You
Okay,
know,
and then obviously you do the other loans that'll help people that maybe don't need the down payment, like the was it the it's not the FTA, it's the rural,
FHA,
no, the rural loans,
oh USDA.
USDA, that's it.
Yeah, those rates are. I was just looking at USDA. They are, they're incredible. You could pay no points and be 6% on a USDA loan right now.
So look at it this way. So a USDA loan is available at zero down. Like that's right. With a 6% rate. And there's lots of areas in around the Tampa area that would qualify. The areas like you've got Plant City, that's got a lot of rural areas.
Zephyr Hills, part of Ruskin, my
Yeah.
mama. It also allows a 6% seller concession, which is nice. So you could put no money down and have all your closing costs and everything covered.
There you
So
go. So as long as you don't mind living a little bit further out, a little bit more rural, but that option then would generally give you for the same price a lot more land, a lot more area to be able to live in.
yeah,
Then you can be in a home theoretically with nothing down, with 6% in seller concessions, and a 6% rate, which this time last year would have been you'd have been ripping my arms off for.
yeah, no, absolutely. It's a great program. It's hard to qualify for USDA. It's really tightened up over the last couple of years. I remember 15 years ago we used to do them up in New Jersey all the time, up in Sussex County, and you're familiar with those areas in Warren County up there. But down here it's tougher. It's tougher to find the property, but we do have a couple areas around here, and then the income limits are a little bit tight and the debt ratios are tight. But for the right person, it's the best program.
No, I think I have somebody for that, so we'll be talking about that in the coming days and weeks.
Then VA, obviously VA is super popular too. So
Obviously VA is zero down, FHA 3.5%. I mean the loan products out there, if you don't have a huge amount of savings, you don't have the 20% down. Just the difference with a smaller down payment on the conventional and an FHA is you're going to be paying PMI on your loan. So try and work out whether that loan amount with the PMI included on your monthly payment, or whether you can make that that large down payment. And remember that you can pull from your 401k without a penalty for the purchase of a home. So using that for your deposit.
we also have that 1% down conventional loan, which is pretty popular. So
All right, 1% down conventional loan. I don't think I'd heard about that one. So they hit me with the highlights on that one so people know about it.
it goes down to a 620 credit score, 1% down. So it's really a 3% down conventional loan, but the bank will kick in the 2% for you. So it's really 1% for you. It's a little bit of a hit to the rate. I do not believe there's PMI on that loan. I don't believe there's PMI on that loan. I'll have to check with you, but it's a great product. I mean, it's got some income limits, and it's a good product. There's a lot. I tell you, if you have the credit score, and the job, there's a product out there. There's a
Okay,
product
so
out
if
there.
you have, what, above 620, I know that there's some of the lower loans will go into the high fives, but in theory, you want 620 or above, I'm assuming, yeah?
Yeah, most of your down payment assistance the good ones are 640.
Okay,
And then some go down to 620, like the Essex program and Chanel are both down payment assistance programs. They give you a lump sum of money, just like Hometown Heroes, higher interest rate, but they go down to lower credit scores, which is nice.
okay, well, Mike, it's been a great, another great session. Thank you very much for starting the new year with us. We look forward to lots of shows with you throughout the year.
You got it. I'll talk to you guys soon. Thank you.
All right, guys, thanks very much for tuning in. We'll have Kim Curtis back next week for this week. Thanks for stopping by.